Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is by an unknown writer, this quote. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We have the Dow Industrials down 95, NASDAQ off 41, S&P's off 15, gold contract up $14.40, trading at $1,218 an ounce. Silver up 35 cents at $16.57 an ounce. Copper flat at $2.76. Light sweet crude getting smoked once again, down $1.89 at $48.15. That baby's going to $32. It's going to be a total mind blower, folks. Bonds, the ever-ready bond market will not stop. You get the 10-year up 19 ticks at 128.12. That's going after the October 15th high. The 30-year just blew that high away. Did it yesterday. Got followed through out here today. You're up 1.5 ticks at 148. And King Dollar is up 173 ticks at 91.79. The Euro's down 30 at 119. And the yen is trading down 99 at 118.65. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We, right now, are at 2012. The swing point is from the December 16th low is 1972. We hit 1992 today. We have volume on the way down here, and what you'll end up seeing here is that we're going to go, number one, right after that lower swing point. We'll see whether we're going to bust it with volume, and it's just not going to stop. Thus far, what you have inside this market is instead of buying every well, they're trying to buy every dip. Bottom line, folks, is that that is not happening right now. They're buying it, and guess what? Every counter-trend bounce is getting sold, and getting sold fast and furious. Dow Industrials are down 104. The low of today is 17,262, and what I expect you're going to see in this next hour, we're going to run all the way right back down there. This is a normal, just a dead cat bounce inside a market that wants to go a lot lower, and what you have is that you have the doors are never big enough getting out of the market. That's what it comes down to. NASDAQ Composite. The Composite is at 4607. The swing point out here is 45.47. That is from the December 16th level. And the larger levels that this market is going for, and I expect we're going for them right now, folks, the October 15th swing lows. That's where this baby wants to go. Gold contract. What do we have with gold? Gold is having wide price spread. We have the juice behind the move. Gold wants to basically take off. And this is a one-way move, by the way, in gold. And in fact, in the market today, it's probably the only sector. Well, yeah, it is only a sector that's green right across the board. Gold today, we have 176,000 contracts. You get the wide price spread. Gold is at 12.18. The next stop of gold is 12.39. What I expect you're going to see very quickly, though, you're going to see about a 13.47 in gold. This is going to be a one-way move. If we take a look at the XAU and the HUI, they both, folks, are over the swing points today. They have the juice behind them, too, by the way. The XAU is trading at 76.12. That swing point is 75.49. It's taking it out. The HUI, Gold Bugs Index, same setup in the Gold Bugs Index. We're at 183.24. That swing point was 181.33. And those extensions that you're going to see out of this are pretty intense. Bond market. We'll do oil next. Okay. So oil. Oil is trading out at 48.07. The price point that it's into thus far is the highs of the lows of 2008. Now, we're deep into those right now. We're $6 into them. The high was $54.62. The low is $32.40. When you get into something like this, folks, okay, bottom line, it wants to go to the bottom. And it turns into a magnet. And the further that we get into it, like we have, the quicker that you're going to get pulled down into that level. So we'll see how it tests that lower level. Now, the way that a test takes place at highs or lows goes like this. If we don't stop and build cause before we get to that low, what you'll see is you'll hit the low and you'll bounce big. Okay? Because what that would do, we've gone down straight 4 weeks in a row. If we come down, and as we get into about the $40, $38 area, and you start going sideways, then look out oil, because that would be setting up that oil can blow away $32. So it's going to be interesting to see how we get down into those levels, number one, and just exactly what happens. The bond market, we go take a look at bonds. What we have with bonds is this. 10-year bond right now had 1.6 million contracts out here today, monster volume. We hit a high of 129.03. The high of October 15th is 129.28. So what you have here is this. You get an expansion of volume. You've taken out the swing point from the 16th of December with volume. That's 1.4 million. We've already done 1.6. That is saying, number one, you're going to get up to the 129.28, and what I expect you're going to see there is that we're going to get up and over that whole level. If we go look at the 30-year, and I'm bringing that, I'm getting that from the 30-year, folks. The 30-year just took apart that swing point. We go to the 30-year bond. 30-year bond today has done 534,000 contracts. And the way this setup is 134, yeah, you get $12. This is on its way right now to 150. If we go take a look at the continuous contract inside the bond market, what we have is this. We'll put this on a 10-year, and what you're going to see is that the highs in the bond thus far is July of 2012. That is 153.11. Well, that's where we're going. We'll see if, in fact, this may be a much larger ABC structure on the way up. And it very well could be, by the way, okay? If it's an ABC structure on the way up, you're dealing with, 6? 40, 55, 65. Oh, man, you're dealing with a 170. I'll get the exact number for you, but we're dealing with low interest rates. The 10-year right now is at 1.96. You need a loan out there for, you're going to buy a house, you're going to refinance a house, go do it, folks, okay? That means the 30 years are running at a 3.8, maybe 3.75 today. King dollar. Let's go take a look at King dollar. We have a King dollar is this. King dollar, folks, okay? Whatever King dollar is doing, it is topping out. And specifically what I mean is this. So King dollar had a low out here today of 91.45. You get a high of 91.93. Yesterday we hit 92.05 on the continuous contract. 92.53 is the high that was generated in 2005. And the reason that I'm speculating that King dollar is topping out here is that the way that the metals market is moving, and the metals market, by the way, folks, okay, is just about the only market that is moving, really. No, not really. Sugar's moving, coffee's moving, but bottom line, the metals market is moving with conviction higher as oil goes lower. Gasoline, oh man, we're going to save a fortune out here. Gasoline, folks, is down 2.5 pennies today, but this baby looks to me like the wholesale wants to go to $1.10. $1.10 gasoline, you're talking about $1.70 at the pump. Nice number. Nice number. Our phone number is 877-927-6648. And let's go take a look at some of the high-volume stocks. And we will have high volume out here today, folks. What we have thus far on the NYSE are 571 million. That means we'll come in about 900 million. On the NASDAQ, we're at 1.6. The NASDAQ's at 1.6 billion. The door is not big enough. The elevator's not big enough, folks. And the elevator is fast and furious on the way down. Dow Industrials right now down 63. NASDAQ off 32. S&Ps are off 11. We're going to be right back.
If you're an active active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get American Express down 157. Citigroup is off $1.50. You get Oxy down 45. Honeywell is up 16. Big Blue is down 3.10. You get Walmart up 95. United Technologies is down $1.13. Inside the Dow Industrials, the weakness inside the Dow Industrials out here today, the financials. You get J.P. Morgan down $1.30. GE is off 51. IBM is down 3.10. You have American Express off 159. Inside the NDX 100, what we have is this. You get NXPI is down 286. That's John. John nailed that one yesterday, man. I told him that That was too much of a risk. That's wild. That's down 285 at 73.15. Regeneron is down. That's getting really toasted and roasted. And they really sucked everyone in on that baby. So they did an upgrade on that. That was trading up at 409 yesterday. Got to 420 today and just gave it up in spades. The IBB, the biotech index, is giving it up in spades big time. Discovery Communications is down 94, and you get TripAdvisor off $2. Let's go to Mike in Dallas. Hey, Mike, what's going on?
How you doing, Tom? News, and second part of the question is, does with our situation, gold doing the reverse of the E-mini most of the time?
Most of the time, this is a great question. Most of the time, it absolutely does not. You know, I just finished the gold report, and, you know, the folks are getting the gold report right now. I put it in this, and this is where it's totally different than 2008, folks, okay, is that the market, when the market went south in 2008, everything went south. All the equity, everything, just everything. In this deal right here, what you have is that the S&Ps, the Dow, the NASDAQ, small caps are going south, and the gold and gold equities are going north. Now, that makes sense because gold and the gold equities have already gone south, and they've been south for a couple of years. Right. The correlation is absolutely different, though. There's no doubt about it. And the disconnect and divergence is still out there, meaning specifically that the dollar index looks to me that, you know, it's hit this high, and gold wants to move. And so there's something out here, okay? So technically that's the setup. Fundamentally, folks, there's something out here that's screaming that gold is going higher. If you remember, depending on how long you've been if you are in the metals market, gold was screaming in 2002 that it wanted higher price. Well, the bottom line, it wanted higher price because we got a depression in 2007. So the question now is, what is it screaming about? Is it screaming about another 5 years from now inflation's raging? That's kind of where my head's going with this thing, you know.
Okay, so. Okay. Tom, does your gold report kind of train you also to trade gold?
No, no, it doesn't.
Okay.
It has specific buys and stops in it, though. Listen, try it for a month. It's free. You know, you have to put a credit card in there, but you can cancel it in 30 days, man. It's worth it.
Okay.
It's worth it.
Thank you.
Okay, man. Have a great one. Have a safe one.
Okay.
And if you're going to try if you want to get in the metals market, folks, this is the time to do it. You know, I haven't been bullish in this market, this metals market, for a long time. I've definitely been bullish in the context of that, you know, I think gold has been at a low for quite a while right now. And that, yeah, can we go from 12 to 1,500? Yes. But there's something else that is happening in this market right now. And it's the way that these are moving with wide price spread accelerated volume. And specifically what it is, and this is what I'm really digging in a big way too, is this. Is that if you remember, you know, going back in 2000, it doesn't, you can take anything. You take 2002, you take 2007, you know, I really thought that the dollar had hit the bottom. It did exactly what it was supposed to do. It comes off that bottom. Now what you have out here is this. You have the whole world is bullish the dollar. My take now is that the dollar is topping out, really, even on a longer-term basis. And this bond move, folks, the bond move is extraordinary, but the bonds are not going to stop. We're going to, we're going into a little different era here, meaning the amount of free money that's going to be out here. Now, with free money, what happens? With free money, gold is free. You know, because the whole mantra on a continual basis is that, hey, guess what? Gold doesn't pay interest. Well, so what? You know, when stocks are going south like this, you can care less. That being said, what has happened in QE 1, 2, and 3 is that we have not got inflation. In fact, you make the argument we have deflation. And that deflation has to do with the fear that's still in the marketplace and the velocity of cash going through the marketplace. I expect that's going to still be here. And somehow, in some way, whether it's 16 months or 2 years from now, that money is going to get unleashed. And that unleashing, I expect, is going to basically take place, and it's going to take place, and I have a, let's see, I'm prejudiced towards this, let's put it this way. Because we have a real estate fund and we're in the real estate business in a big way also, I suspect that's where it's going to go. And now, where I'm going with that, the reason I'm going there with that is this, is that I remember the 70s, and I remember how this thing basically played out. And the way it played out was like this, folks, is that everything was dead in the water for quite a while. And then rates start going up. But as rates were going up, the inflation rate was going up even faster. And the best place to have your money at that particular point was in real estate. And I remember the first house I bought, I paid 14% interest. Well, guess what? It didn't matter. At 14% interest, you still doubled your money. It was sick. Okay? Now, that phenomenon went on for, you know, a good 6 or 7 years. And will it get croaked again? Yes, it will. But that's, you know, we'll see where, in my mind, is still kind of just going through this whole thing. But we'll see where this shakes out. But that, you know, there's something that's hanging out there right now that looks to me that, you know, gold is sniffing it out once again. And if it's not sniffing it out, what it is doing, someone is out there, well, what you also have on a fundamental basis is that it takes 10 tons of dirt to get 1 ounce of gold in a decent gold mine. That in itself, when gold's still at 12, 18, that's cheap. What is also on the table right now, and I'm going to get a few of these CEOs on, is this. One of the largest expenses inside the gold market is what? Energy. This downdraft with energy is going to put money in the gold miners, in the silver miners, ASAP. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now are down 34. Nasdaq's off 25. S&P's are down 750. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow's down 62, Nasdaq's off 31, S&Ps are off 10.5. We take a look at some of these larger Dow stocks. We'll start with good old. No, actually, you know what we want to start? We want to start with the financials. We go over to J.P. Morgan Chase. What we have with J.P. Morgan Chase is this: your first swing point of this December 16th is 58.11. We went to 58.35 today. Monster volume, folks. We've done 23 million shares. That's going into 20 million. What does that set up? That sets up the October 15th swing low of 54. There's your probability and the confirmation going much higher. You went to the swing point. You hit the first swing on December 16th, had 20 million shares. You did a counter trend bounce with 12 million. You get toasted and roasted again with 23 today. That's set up. That's set up right down there at $54 in a big way, too. American Express. We take a look at American Express. American Express comes into this lowest swing point out here today, the December 16th swing point that had 4.9 million shares. We've done 3.9 thus far. 88.19 is the number. We've hit 87.94 today. That thing is going to basically also get down into the $78 area. Let's see. Morgan Stanley. We take a look at Morgan Stanley. MS, you got Morgan Stanley down 13 million shares today, and that lowest swing point only had 11 million. So you're building cause in Morgan Stanley to run down to the $31 area, and right now you are at 36. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Yeah, how you doing? I'm looking for AMDA.
AMDA. So what do we have here? So They design, manufacture, distribute broad range of spine and joint implants. Okay, so let's see.
I didn't know what it was.
So you're looking, so it's traded at 95 cents, and what are you looking for, 211 or something? That what's happening?
Yeah.
The tough thing right here is that because of the way that the markets are going south so quick, I like what it looks like, Victor, okay? But I can tell you, we had 6 short positions on and 1 long, and, the long went south today. We lost like 30 cents. I wouldn't be going long anything right now because they're going to take everything south. But this is a nice setup, so I can see what you're looking at, man. It's going to be tough to get anything positive, particularly with a 95-cent stock,
Okay.
You want to look at Twitter?
Yeah.
So if we look at Twitter, TWTR rather. Twitter's trading up 240 today. Okay, so you got this. This might be off the bottom. I wouldn't buy this yet, but let's take a look at this. Because
why do you think the market's still going south?
Why?
She'll cover and rally, or somebody will come out with some news or something. You know what I mean?
No, this, what my take is, man. It's like one of the tigers saying in the den. It's the truth. Buying the dip works until it doesn't.
All they got to do is lower the dollar now. That's it, and the market will rally.
No, the market hates the cheap dollar. That's what's going on now. That's what's so weird.
The cheap dollar for the past 2 years. Now they like the high dollar, so the market's all on crash.
Well, we know the market's on crack. There's no doubt about that, man. that's a fact.
They like the low. They liked it when it was low 2 years ago. Now they like it when it's high.
That's right.
They'll rally it with a lower dollar now. Whoa, that's the reason.
Dynamics always change.
Over the place. You have gaps all over the place until 2013, so maybe they'll get filled.
All right. I think some of them are going to get filled, man.
Yeah, maybe it's a good time to sell them.
Okay, man.
All right, take care.
Have a great one, man. Have a safe one. What you'll see, let's see, what do we got? Yeah, you're only at you had 41 minutes left. 41 minutes is a long time in a market that has volatility, folks. That's what it comes down to. So let me pull up the SPY here for a second so I can show you, how markets like to move when you're actually moving up in against volumes. Yeah. Today, we went from, we're at the 6th, right? Yeah. So we started off up at 202. Market goes south to 198. Well, the last time that you had, juice on the way down, that the high of that was 201.30. When we just did a bounce there, we did 201.35. And you came into that, we did that on a 10-minute basis with 5.1 million versus 5.4. Now that's a close call, meaning, that very well could have rallied from that point. It hasn't. It just came off that with 4.1. And now what that sets up is a test of 199.37. If I bring this back to the E-mini, I'll show you how clean this is here. And in fact, Mike, if you're listening from Dallas, okay, this is what I think you're probably looking for in the gold market. We do this intraday, but when in the gold report, it's not bisected and dissected this dramatically because what is bisected and dissected is where the buys and sells are. But anyway, let me do this for you. So when we came down this morning at 11 o'clock, the high was 20950. The low of that high was 204. Okay. When you go back up, now we did that on a 10-minute basis with 80,000 contracts. When we came back up, we just did it with 61,000. The first time up, what we had done is this, and this is where in the Tigers den I says, listen, man, the sell's 204. And the reason I did that is that I says, okay, the market's weak. I did the low of that high volume bar. That's a day trade. That's what you're always looking for. So we came up. You got up to 206. Then you basically gave it back up to 199. It said, you know what? I want to go hit the top of that bar. Even when it hit the top of that bar, we hit 210, but you did it with 61,000. And here's what the testing's all about. You got to 210. You closed the bar at 209, and the high of the test was 209.50. So that right there was saying that's the failure. 20,000 less contracts, here you go. Okay, so now let's bisect and dissect, say, okay, where can you go down now? So the first thing that you look at there is that, okay, give me a high volume bar. So here's your high volume bar, the first one that it should come hit. And that's 1997. Now, you take the volume from that 1997, which is 57,000, and if you don't get the 57,000 when you come in there and test it, guess what? Can't bust it down, it's going to try to bust it back up. So that is the essence of how you should be able to look at dailies, weeklies, monthlies, all of the above. Where is the force? All you're looking for, not all you're looking for, what you are looking for specifically is that where is the supply and demand, where is the force inside the marketplace? And that gives you a nice inclination as to where it's going, particularly when you have markets that we have right now. Now, about the bounce, folks. I suspect we're not going to be getting a bounce. Why? Because there's still no fear in the marketplace. In fact, what you have, now check this out. Oh, this is dynamite. This is sick. Okay. The tick index, we've done a minus 1085. Well, you won't get a real bounce in the marketplace until we do a minus 1250 to 1325. But you know what we got? We got a plus 1258 on the bounce that we just had. And you know what that means, folks? That means that all the dip buyers thought they missed it, okay? They went in and bought it, and there's no way you get a plus 1250 in a market that's going south. What that is, man, they just took them in, sucked them in. They're going to flush them right down the drain. In a fast market like this, that tick index can tell you a huge amount. And I can tell you it's really unusual that you get a plus 1250 in a down market. But what's going on is that we're still close enough to the highs, and people have made plenty of bread buying every single dip. So bottom line, this market continues to want to go south. Let's go to John in Winchester. Hey, John, what's going on?
Hey, not too much. How you doing?
Oh man, I'd be better if I told you to buy that one sell the one you wanted yesterday. That's the largest mover down in the NDX 100.
What, MU?
No, NXPI. I
didn't even look at it. What happened?
Oh, it's sad, man. It's down $3.15. Oh, and so you want to go look at SanDisk, which we have. I know, man, sick. Okay, it's pretty sick. Okay, so SanDisk is up 83 cents, but this is building cost for lower price. It can't hold price out here today. You're at 96.19. You're coming into this 95.61, and I expect that you're going to break that. That's going to get down into this 86 area. So let me just see when this is, the 22nd. So it's coming out with numbers on the 22nd, so that's not bad. What we will have today, though, which will make a difference, Micron is coming out with the numbers after the close today, and Micron is trading like it wants to go a lot lower. Micron's coming into its swing point of 32.37 with 32 million shares versus 28, John. So I suspect these chips are going to continue lower.
I got a question. I'm going to hold.
Oh, yeah, sure. Stay there. This is Tom O'Brien. This is TFNN. Dow Industrials right now are down 63. Nasdaq's off 37. S&Ps are off 12. We're going to break back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are down 74. Nasdaq's off 40. S&Ps are off 13.5. We're talking with our man, John from Winchester.
Yes, I bought, my fiance took my old book, Time in the Trade, that you had autographed for me from the course I took many years ago. So I shouldn't have lent it to her, but she loved it. So I went out and bought another one. It's a lot different than the initial one you had, huh?
Well, it's not different in the aspect of price and volume. It's different in the aspect that I would say that I'm hoping that there's more clarity inside the Gartley. And so there's less nuance, I would say, in a few of the chapters. Because what happens, folks, what I do with price and volume, okay, what ends up happening is that there's no doubt you got to get used to it. Say, okay, what are we going into? So, you know, are you going into a high volume day, a low volume day? And I understand, you know, that was the third one I wrote in the last, 12 years, 14 years now. You know, so I realized that, okay, when folks are really starting, you need a yes or no. You need almost binary deals. And so that's the new one really has a few straight-out binary chapters that specifically say, no, you buy here, you sell here, this is how you do it. So I made basically, I just put more rules in them, you know.
And does it tell you where to find the tick readings in that book? I haven't done.
Oh, see, now that's a great point. Now, okay, so now check this out, folks. Okay, what I didn't do, and that's, you know, I suspect I should have done that, you know, because particularly when you have a down market like this, I didn't put the tick readings in, I didn't put the trend in. You know, so I know it's terrible. It's,
how do I find the tick if? Is there a website or?
Well, yeah, right on Yahoo. I mean, Yahoo has the tick. Okay. You'll have to.
Finance.
Yahoo Finance. Yes. Yeah.
Okay. I appreciate your help, Tom.
You know what to do? Hey, John, do me a favor. Email Leanna at TFNN. Okay.
Leanna.
Leanna, Leanna. Email her, and ask her for me to send you. I'll send you the tick and the trend chapter from the first one. All right, I'll copy it. I have it here. I'll copy it and send it to you. All right.
Fantastic.
Okay, man. Have a great one. Have a safe one.
Appreciate it. Thanks.
Okay.
Bye-bye.
Market-wise out here, folks, you got the Dow down 96 right now. Nasdaq's off 46. S&Ps are off 15.5. Volume-wise out here, what we're going to have is this. The volume, you're going to have 600. We're at 672, so that's going to bang in about 900 million on the NYSE. On the Nasdaq's going to be a big number. Yeah, we're already at 1.9 billion on the Nasdaq. As you're going south, folks, bottom line, you get the pickup on volume. It's going to blow away these swing points. The SPY is down 185 million today. We haven't reached the swing point yet. It's 197.86, and we did 259 million. I expect what you're going to see out there tomorrow, you'll basically blow that baby away tomorrow. Let's go look at Google, the L shares for our man Mitch. Google's down $10 right now. You're trading at 508. And she's coming into this low with juice behind it. We've done 2.5 million. She is going to need more volume as we get down into this level. The cool thing today is that it hasn't hit the low. That's what it comes down to. He's only looking for the 497, 495 to get hit. Yeah, it's going to get hit. It's going after that. That's going to get hit fast and furious. What you do have here, folks, is this. If I go back to the tick reading again, you don't get. You do not get a plus 1,258. That is a market, folks, that basically has made a bottom. You do not get that. Well, not made a bottom, at highs. When that tick came in, with that bounce that was coming in, unfortunately, there's a lot of traders, investors thought that buy the bounce again, and they thought that, okay, it's going to happen. We got a different market, folks. That's the bottom line. It's a different market. It's in spades, and this thing is operating how markets operate that want to go not only lower, but the proof. Well, not the proof. There's no such thing as proof in the marketplace until it gets there. What you do have is you have high volume swing lows that many of the stocks have already gone to. They're broken to. And the larger picture, by the way, the larger picture on the SPX, okay, is 1360. 1360 is game here in 2015. So that is a number, folks, that is insane, okay? But because what we have done is that when we broke the uptrend, in October. Then it basically took everyone to the clean. Well, it took me to the cleaners. Okay, almost lost my nails again, going higher. But guess what? They grow back quick. So what ended up happening? It failed at the highs again. It's back inside the lower range, and once you're back inside the lower range, you have two different things. You have 1820 that you can that it's going to go after. The larger picture, though, folks, is all the way down at 1340, which is the November 2012 swing low. That's the larger picture that's hanging out here right now. And guess what? That, folks, very well, okay? Where do you put this up? This is what's so bizarre about this. That could very well just be a normal retracement in a market that wants to go higher. You got to remember something. We started out at so check this out. You'd have to do a retracement. I'm saying 1360, 1378. It's only a 50% retracement of the whole move. That's a normal move in a market that can go higher. So you got to pay attention to that. Please, just pay attention to it. Apple. Man, Z wants to look at Apple. We take a look at Apple. Apple's going to go lower, folks, okay? Apple's flat at 106.26. You're right at the swing point, and you have the volume behind the move. We've done 62 million shares. It's taken out the swing point in Apple. Apple's going to be going after 95.18, and you're going to see that in about a heartbeat. You know, these markets, let me tell you something. Now is the time not to sleep. That's the bottom line. You know, if you're a bull, don't sleep. Get your stops in. If you're a bear, absolutely don't sleep, okay? We've been sleeping long enough. Bottom line, now it's game. And, you know, for all you bears out there, we know what game is. Game is that you can't take your eye off the ball for 1 second. Game is high volatility. Game is take your money and run. And, you know, when you take a look at the markets, we know how this baby shakes out. The way the baby shakes out, folks, if you've ever traded both sides of the market, is that when the market goes down, it takes no prisoners, it's fast, it's furious, and it's over before you know it. This is Tom O'Brien, this is TFNN. Dow's down now 121, Nasdaq's off 59, S&Ps are off 20, we're at 1996. It's a beautiful thing, folks. You stay right there, we're going to be coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Albert Ferretti. I start with the idea that nothing is impossible and everything can be done in the end. That's where it's at, folks. You know, nothing is impossible. Market-wise, let's take a look at it out here. We had the Dow Industrials down 130, Nasdaq off 59, S&P's off 21. All of those, folks, down with volume. We take a look at the S&P. What the cash S&P is doing is this. Cash S&P, we're at 2006. The low of December 19th, or 16th, rather, is 1972. We're going to be going after that, I suspect, tomorrow. We've done 922 million, and probably actually we'll more than likely get into 1 billion because they're still banging it out down here. Yeah, at 940, we'll end up doing 1 billion shares on the way down. NASDAQ Composite, same number on the NASDAQ Composite. Monster expansion of volume on the Composite. Composite's down $59. 2.1 billion shares. We're at 4592. And that's going to go after the swing point of December 16th. The largest swing point, of course, folks, is the October 15th swing. That's where this baby wants to go to. That's where the S&P wants to go to. And the S&P, that's 1872. And the NASDAQ Composite, you're talking about another 480 points down. That's 400, no. Yeah, 480. Yeah, 480 points. Yeah. Yeah. Big numbers, folks. Small caps. We take a look at the Russell 2000. Small caps get whacked out here today. You get the IWM down $2. 61 million shares traded. Now, that's going against a swing point of 62 million. So that's saying, number one, the small caps are going to hit it. Number two, the larger issue, of course, is the 103.54 level at the October 15th swing low. That's where this. That's what all these indices want to trade into. Gold contract. What do we have with gold? Gold wants higher price, yet wide price spread, accelerated volume. We did 179,000 contracts out here today, up $14. Gold's on its way first up to the 1250 mark. Then I expect what you're going to see is the 1341. XAU, HUI, both took the swing points out with volume today. Okay, nice move out here on these equities. You had the wide price spread, had the accelerated volume. In fact, was the only sector in the whole market that had any juice behind it in the way up. Now, that is the divergence of 2008. There's no doubt. Bottom line, the market was going south. 2008 took everything with it. We know the gold and silver stocks had already got croaked. Bottom line is that they are moving with force topside, though. And they're basically screaming that whether it's 2, 3, 4 years out here, there's going to be inflation that's raging. Bonds. The bond market, folks, so check this out. The move in the bond market is not close to being done. I'm going to put this on a continuous contract. You can see how this baby's shaking out. First off, the bond market has been in a bull market since 1981. It's the largest bull market I've ever seen. The 10-year did 1.6 million contracts today. We're at 128.44. The high of the October 15th is 129.28. That baby's going to get probably taken out tomorrow. That wants to go, the A point on this is 23, the B is 30, so you got $7. That is on its way to 132 right now. The 30-year bond not only took the October 15th price point out, it's 2 points above it right now. We're at 148.15 with volume. The 30-year is on its way up to the 153 area. The highs that were generated in 2012 were 153.11. That's where we're going. And more than likely, what you're going to see is going to probably blow that away. The reason I'm saying that is this, is that when the 30-year pulled back, it didn't even pull back to where it broke out from, the 127 mark. We broke out in August of 2011. Topside. This very well could be a much larger ABC structure on the way up. If that's what you have, let me tell you something. Rates are coming down dramatically. Fundamentally, we're at 1.9 right now on the 10-year. You want mortgage money? You're going to go buy a house? Do it, folks. Because bottom line is that the 30 years right now should be running about 3.8, 3.85. King dollar. What do you have with King dollar? King dollar's hanging at these highs up here, and I expect that the longer that the King dollar stays up here, the more that on a continuous contract, that high from 2005 wants to get hit. It isn't hit yet. We came within 50 ticks of it. We hit 92.05. It's 92.53. I suspect it's going to get hit. That being said and done, though, that this move, looks to me like it's going to be over. That's a 100% move of a move that had started in 2011. August of 2011 is when this move started in the dollar higher. When you get a large move like that, whether it's a currency, whether it's a commodity, whether it's an equity, when you finish a 100% move of a move, folks, what ends up happening is that you get a pullback. Now, when we get that pullback, we'll know how deep it's going to be in the first couple weeks. The reason being is that if we start pulling back and you get wide price spread and you get volume, that'll say it's the deeper pullback. When we get that pullback, if it's just light volume, guess what? That means that it's going to be a light volume pullback and you're going to see higher prices. MU. Micron Tech just come out with numbers. Micron Tech closed at 32.87, down 90 cents. Micron Tech right now is trading at same price, 32.80. Numbers go like this on Micron Tech. Either that or they just... Is this closed? Is this... Hold on one second. It doesn't look halted. It looks like it's still trading, but this is what you have. Micron Tech missed top line and made bottom line. Oh, check this out. This always gets interesting. So the Micron Tech, the revenue was $4.57 billion. The estimate was 4.61. So when you miss the revenue number, folks, it's never good. They made, however, the number. The bottom line estimate was 92 cents, and they made 97 cents. bottom line, the market's not going to believe them. That's how you're going to see how this shakes out. The market's going to figure this out in a bit. So it's trading flat right now. That's the bottom line. What we did have out here today, oil. Oh, we didn't go into oil yet. Oil, folks, is just pretty wild. There's no doubt. Oil down 2.22 today. We take a look at this contract, and it's a one-way trade. And that one-way trade, folks, is going to bring it down to $32. Absolute mind blower, no doubt. We'll see how we get there. It looks to me, though, that we had another expansion of volume today. This thing's going to be fast, furious, all of the above. You're going down into those lows. The XLE, the oil integrated stocks, expansion of volume today down $1 at 75. Coming into a swing low out here of 72, 57 million, did 41 million out here today. What we did have out here today is that the financials are breaking down. The XLF is the first day that the financials really are breaking down. You had the wide price spread. You had the accelerated volume. We did 46 million shares. You're coming into 36 million. Financials are going to just blow that baby away. The XLF is at 23.84. That's on its way down to 21.57. JP Morgan was leading the charge lower out here today. 28 million shares traded, down $1.50, going into a swing point of 20 million shares traded. Let's see if good old Warren Buffett's Berkshire Hathaway, that had an expansion of volume too. 4 million shares. That's going to lead back. Well, it's 4.7 on the swing point though. 144.75. That's where we're going. 144.75 in that baby. Some of the high volume stocks on this market as we were running into lower price is that you have GE down 53. Micron was off 90. You had Microsoft down 67. JP Morgan Chase was the leader out here. Facebook was off $1. Merck was actually up $2.50. We look at some of the Dow stocks. Big Blue is in big trouble. Big Blue, folks, is on its way down to that oh my God, that's lower than that. So Big Blue is down 344 today at 156. You had Caterpillar down 56. You stay right there, folks. Our man, Mr. Andy Heck's going to be coming up next. Growling and prowling with us. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish down 130, NASDAQ off 59, S&P's off 21. And as we do each and every Tuesday at 20 past the second hour, we get our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, 5 to 6 Eastern Standard Time. Andy has an outstanding show. You can get it right on your cell phone, TFNN.mobi. So remember, no matter what radio station you're listening across the country right now, you can get us 24 hours a day, anywhere you are, right on your cell phone. It's TFNN.mobi. You want to get Tiger TV, you've never seen that, you want to see the charts really clear, just go to TFNN.com, hit the TV on the top right-hand side. You get the audio, plus you get the video. Andy Hecht, what's going on?
Happy New Year, Tom.
Hey, you're sounding a little better.
I'm a little better. Today I'm celebrating New Year's today because I got a touch of the flu on New Year's Eve and spent a couple of days in bed. So I apologize about my voice.
No, don't apologize at all. You know, and folks, this flu, we all got to take care of ourselves because this one is a doozy. I mean, it's supposed to be a really bad scene, right?
It's a bit, and you know what? I got a flu shot, actually.
Yeah, well, that's where you probably got it from.
Nah, I got it months ago. So, let's talk about a couple of things. First of all, I agree with you 100% on gold. I think it looks spectacular here.
It's crazy, isn't it? I know. I mean,
but as much as I agree with you on gold, I disagree with you on the dollar.
Okay.
And I think we're going to see a huge divergence. Yeah. I think, listen, markets are extending, Tom, like we haven't seen in years. Look at crude oil. I mean, it went from 107. Where are we? We're 40-some-odd, 47 and change today.
Right.
We're seeing market extensions, and not only in crude oil, in iron ore, in many, many markets. And we're seeing it now. We're going to start seeing big volatility in the stock market.
Yes.
I think because of fundamentals, because Europe is in such trouble,
right?
With Greece and with the, and look, they have this election on January 25th. If they leave the EEC, if they leave the euro,
yes,
oh my God, it's a precedent like you never saw. And Draghi's going to have to start quantitative easing big time. So even though I agree on the bonds that interest rates here aren't going up, they aren't going down here, and they're going down in Europe. They're going down even further. And you know what? It makes the dollar so spectacular. The flight to quality here is all going to gold and the dollar.
Yeah, no, I can see your point. I can see your point.
I think the dollar goes through 92.53 like a hot knife through butter. And I got to tell you, given the market extensions, Tom, I can see a scenario where we get dollar-euro parity in 2015.
That's intense, man. Yeah.
That would be intense.
Now,
I mean, that would
and
blow
there's
away
no doubt, folks, that it can happen. Because what you have is this. So watch this. I'll put a chart up here just for a second for you. So what I'm going to do, folks, is I'm putting up a gold chart, right? And what we're going to do is I'm going to turn around, I'm going to change that, and I'm going to put it into euros. So what you have is that when we take a look at this, what you're going to see is that yesterday we had the gold and euros breaking out. So we're at, right now, you're at 1,026 euros. Now, that in itself, just on a technical basis, sets up 856, so 1,000, so 145. That sets up 1145. Yeah, 1145. Oof. Check this out. This sets up 1145 euros. Now, 1145 euros, folks, sets up, let me get this straight. Oh, my God, this is huge.
It's huge. Yeah. 1145 times. Let's just say the dollar goes to 115.
1145.
It's 1316.
Right, and which would make sense because that's the top of the swing points. So what happens is this, folks, because gold is universal. You know that very well can happen. And
there's no rules in this game, right?
No, there is. There's no rules. There's no doubt. There's no doubt, man.
The bottom line is that gold and the dollar can rally at the same time. And I think that's what we're going to see in 2015. It's amazing. I'll tell you another thing. I want you to look at a chart for me.
Okay.
Copper. I think it looks awful. And I think it looks like oil did before oil cracked lower.
Yeah, well, I can tell you that when I was doing the gold report today, SCCO looks like it wants to test the bottom, and that's the largest copper stock in the world, folks. And it very well just may break it. You know what I mean?
Tommy, yeah. Below 272 on copper on the active month market contract, there ain't nothing until $1.25.
And folks, okay, and I'm sure many of you folks remember our man, Mr. Ed Young. Ed passed away way too young. But when copper was coming off these lows, and we're going all the way back in 2003, it was 79. Copper was 79 cents forever, folks. Then it made the next leap to 128. And then, like, when it took off out of that 128 level, it was like, you got to be kidding me, man. So I know what you're saying, Andy. There's no reason it can't go back there. Do you know what I mean?
And the action's been terrible in copper. I mean, it's been making spike lows and then coming back up. It's lower lows, lower highs all year long. And now we're flirting. Look, man, we're 4 cents above that key level. I mean, that goes all the way back to 2010. Ugly numbers.
Well, I want to bring up something that, so folks, we have this Tigers Den, and it's a great trading room, and there's a lot of great ideas that go back and forth. And I was, when I was on the first hour, Andy is in there, and then someone had said to him, let me see this. What it was about is that, don't you think that a 50% retracement is enough in some of these commodities? Well, what happens, folks, is this, is that, I'll let Andy speak for himself, but I can tell you from my personal experience being in the markets, when markets get volatile and go south, anyone that's been in the market a long time, that's when that whole Jesse Livermore saying, you're trying to sit on your hands as long as you can, because they're going to go further than you ever can imagine. And the longer that you've been in markets, the more that you can sit. And when I saw that come across the end, I says, oh, no, we know that can just keep going and going and going.
It can keep going, like the ever-ready bunny. I mean, on the downside and on the upside.
No, both ways. No, that's my point. Both ways, especially in commodities. And that's my point. Yeah.
Right. It's just amazing. It's just amazing what oil has done, But it's kind of a carbon copy of what happened in 2008. You put one chart on top of the other. It looks very similar. And that's why industrial commodities, I'm looking at copper here, and I'm like, this thing's standing at the end of a cliff waiting for someone to just kick it off. And it just might be Red Kite because, listen, they're long a lot of copper there in London.
Yeah.
And, look, it's not a high odds play right now, but I think that the thing looks weak. I don't see where the demand's going to come from in the next couple of months.
Well, you saw last night in China. I mean, I guess the difference in China versus Draghi in Europe, and that's one of the problems here, folks, is Draghi just keeps talking and he has no stick. He's not a Roosevelt, okay? China has the stick. And, China got paranoid last night. I mean, China's saying that, okay, no, we're going to put $1 trillion into this economy. So,
right. And listen, it's all about China when it comes to commodities, no question. Right. But China doesn't live in this world alone, Oh,
no. And listen, and I can see them saying that, we'll do that, but they can still continue to have that baby get low.
Absolutely. I want to talk about the dollar more. Can I stay for a couple of seconds?
You got a voice. That's a beautiful thing.
I got a voice. I wanted to go back to that.
Look at that, Andy Heck. He's a master. Growling and prowling tiger. You stay right there, folks. Andy and I are coming right back. Dow finished down 130. NASDAQ off 59. S&P's off 21. Going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 130, NASDAQ down 59, S&P's off 20. Get our man, Mr. Andy Heck, with us. And don't forget, folks, every Tuesday, Thursday, 5 to 6 o'clock, outstanding show Andy has right here at TFNN. Get it right on your cell phone. TFNN.mobi. Andy also has a great newsletter. Test drive it right here, right now. The way you do it, go to TFNN. You'll go to newsletters at the top. You'll go to trading newsletters. You can test drive it 30 days absolutely free. So you're a trooper, man. Thank you.
My pleasure. Listen, I just wanted to talk about the dollar a little bit more.
Okay.
And really it's the dollar versus the euro. I mean, first of all, the dollar index, which is made up of the euro, the yen, you got the $8 in there,
sure,
the C dollar, a couple of other things
it's
in there.
It's 60% the euro, right?
Right, 60% the euro. Europe has problems we don't have. Forget the sovereign debt crisis, which is huge.
Yes.
Their biggest trading partner is Russia.
Right.
This is like hurting we are so isolated here with our economy in the U.S. that there is such a great case for the dollar fundamentally here. And it's got the technicals behind it, Tom. I mean, look at the thing. It's been rallying since May 4th. It's up 14% on growing volume. And yes, everyone does love it. But I really think it's going to shock people. I think they're going to love it to a point, but I think it's going to shock people how high it goes. Just my guts tell me.
I'm with you. So what happens in markets, folks, is this, in my own head. I'm a technical trader, but what ends up happening, I'm always looking at the much larger picture, right? So you can imagine, Andy, I've been in this gold market forever and the dollar, and just like you, basically. So I'm saying to myself, okay, what is going to have the dollar pull back? Because when you look at it on that basis, there's no doubt that it's like, okay, we're strong. Now, I think we might both of us always think, I've always thought we're 10 times stronger than Europe, folks. I love Europe, and I love Europe to go visit the Amalfi Coast, okay? Europe has been toast forever. I had an office in London in 1981, okay? And they were toast then, right. And I was making a fortune then because they were toast, okay?
Right.
But so in that context, right, I'm watching this, and this is where my fundamental take is on this. And this is, I think we're going to wake up one of these mornings, right? And we're going to be in shock because the Fed is going to intervene inside our Treasury is going to intervene inside the dollar because it's getting so strong and because they're going to make the excuse that Europe is going to get down the tubes.
I agree 100%.
So that's kind of where my head's going with this, Andy.
I agree 100%. And you know what, Tom? There is nothing more bullish than the dollar than when the central bank starts selling it. It'll slow it down. It'll smooth it out. But that will tell the world. That'll flash a signal that they're bullish. That they're worried.
Exactly. Exactly.
And that's, I mean, I was going to say that. Central bank intervention in the dollar will be the most bullish thing we see in 2015.
Listen, man, I agree. I think that we're in good shape, man. You know,
I think it's going to look pretty good. The other interesting thing we're going to see in 2015, Tom, and this goes back to copper and oil and iron ore and all this. And, you know, I've been talking for a long time about how, you know, Dodd-Frank and the Congress have pushed the commodities business out of the U.S., away from the tax collectors, away from the regulators here. What we're going to see here is, and what we're seeing already, we're seeing the dominant producers building market share at lower prices and forcing out high-cost producers. I mean, we see it in the gold market. We see it in iron ore, certainly with BHP and Rio Tinto. We see it in oil with the Saudis and the Kuwaitis.
Right.
You know what? This is long-term. The next bull run is going to be crazier than the one we saw, you know, in up to prices in 2011. Because it's going to be totally controlled. They are building the case for total control away from U.S. shores. Very interesting.
No, it is. I can see it, man. I mean,
that's why I think they're going to trash copper. Why get the high cost guys?
Oh, out? Totally. No, I can. What happens? Folks. What happens particularly when you're accumulating anything, you want to accumulate at low prices. I mean, I remember the first run on gold, Andy, right at 282 to 300. I'm saying
the brown bottom.
I'm saying please don't go up anymore, you know, because you want to just keep buying it, folks. Okay.
Right.
You know. So
I mean, these are going to be great opportunities, but the problem is you're going to have a lot of patience. It's very hard. Look, I'm bullish on oil long term, but would I buy it here at $48 right now? The trend is your friend in oil. You know, oil looks like it wants to go to $32.48. It smells like it. It looks like it. I'd rather buy it when it starts rallying than buy it.
I agree. Well, particularly because technically that's where it wants to go. Fundamentally, there's not one person that is on TV that's saying it's not going to bounce right now. It's like, okay, well, it's going to bounce right now.
But you know what's amazing? Now this contango in oil, Tom, is enormous. It's like $16 out 34 months. That's 12%. Where are interest rates?
Yeah,
right?
Well,
this is crazy.
Today on here, this gets even better, folks. So the 10-year is at 1.9, but if you want to look at the 5-year, the 5-year is at 1.4, and the 2-year is at 0.6%.
Right, so you got about 10+% left over to store it and transport it around.
Right.
And then sell forward, and then with the money, you know, whatever's left over after those costs, you sell forward. If you're you can't do those trades if you're you or me, but you can if you're China. You can if you're a giant commodity firm like a Glencore or someone like that, and that's just printing money for these guys.
Oh yeah.
And China's certainly going to do it because it'll give them access to the physical, and at the end of the day, that they're the ones. Now the thing that I'm starting to look at here is gasoline, Tom, because I think that we're going to see a big spike in demand. We're going to see a lot of SUVs sold in the spring. We're going to see a lot of driving done this driving season, and I think that's the first thing. I think we're going to see the crack spreads pop as we come into the spring.
I saw you in the den, and these numbers came out today, folks, okay? They sold more than 1 million Jeeps. Never mind, that's up, I think it was up 34%. Like Jeeps, SUVs, that's just those, okay? There's no doubt.
And Tesla, that's a problem.
Tesla.
Electric cars, that's a problem. You don't hear too much about Tesla and electric cars these days, huh?
No, but I think the stock wants to go a lot lower. There's no doubt about that. You know, we're at 211, and you know it looks to me like the stock's going to go to 181 to 160. Once it cracks 181, 116 is on the agenda. I think it will hold 181 for a bit.
Hey, I'm rooting for them. Listen, they're building a big factory here in Nevada, so I'm a big fan. I'm rooting for Tesla, but right now it is not their sweet spot. That's for sure.
Yeah, and what we do have. Is that we have oil, man. That's the bottom line. See, that's the intriguing thing, Andy, in general, though. It's like, how much oil are they going to basically be able to keep getting out of the ground, folks, at $48 like we are right now? That's going to put a lot of people out of business.
Exactly right, and then that'll create a deficit eventually. Look, it's all the commodities cycle. And you have to remember, the two most important political commodities in the world are oil and wheat.
Yeah.
And in wheat, we might see a very interesting situation this year. I have a feeling that Russia's going to stop exporting wheat because of their economic situation. And if they do that, we'll see the wheat price really pop.
Well,
I'm getting very interested in wheat here.
When was the last time, I remember when I was a kid, and that Russia was one of the biggest buyers of wheat from us, right?
That was when they had bad harvest.
Yeah.
When you were a kid, that's a while back. That's when I was a kid. I don't mean to pull the clock on you. But
I know.
It's a different Russia now, and there's a lot of wheat in the Ukraine and certainly, and wheat's been popping. It got up to $6.70, but it's pulled back. It's below $6. It's $5.90, and these grains are kind of cheap. Very interesting. Also, the worst performing commodities in Q3 in the third quarter were the best performing commodities in the fourth quarter.
Yeah.
And that's something to keep in mind when it comes to energy. It's very rare that 2 quarters in a row, are the same sectors in a toilet. So that might turn around sometime in January. Very hard to, it's motoring now. You can't stand in front of this truck. But, that's a lesson. It's a lesson to learn. Corn looked like it was going to zero when it was $3. And where is it now? It's $4. Still half the price of where it was in 2012.
Okay, you're going to save your voice.
I'm going to save my voice for my show.
You got a whole hour
Thanks,
coming
Tommy.
up, man. Hey, thanks so much, Andy. Have a great one, man.
Soon.
Have a safe one.
Okay.
That's our man, Mr. Andy Heck. He's going to be coming up next, folks, and he is a trooper because he got the flu on New Year's Eve night, and he still, has a little bit of it. Because what does happen is that the bottom line, an hour projecting your voice, folks, it doesn't take anything when you're healthy. But when you're not healthy, that's when you have to be cognizant of it. And, so he's got a little 15-minute rest here, which is a beautiful thing. So after the closeout here, folks, Micron came out with numbers. Numbers are flat right now. Micron closed at $32.87. It's trading at $32.18. It was down 90 cents. Now you're down an additional 18 cents. They missed their top line. They made their bottom line, but the market never believes you when you miss your top line. If you do a lower gross, how do you make more money in the bottom line, folks? It's financial engineering. Stay right there. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out his powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. The Dow Industrials finished down 130, NASDAQ off 59, S&P's off 20. And, folks, if you haven't test drove the gold report yet, great time to do it. You can come over to our website at TFNN. You go into newsletters. You go into investment newsletters. You can test drive the gold report 30 days, absolutely free. And you get the edition today. The edition came out today. So let's go take a look at this gold market for a second. We're going to go with the XAU and the HUI. XAU, what do we do today? You go up $4.04. You take out the swing points that have been out there going all the way back to October 29th. Now, since October 29th, that's where that final downdraft occurred. The XAU went from $75 down into 61, fast, furious, all of the above. And, of course, that had been going down 5 months prior. So that's the flush out. You have the first expansion back up, which went to 75. You pull back all the way down to 62 at light volume. Well, today we took this out, folks. You took it out. You had the volume taken out. And what that sets up, inside the XAU right now, you're at 75. We'll cancel that one. What that's setting up is a run inside this XAU bottom line up to about 90. So that's going to be, you know, in the way you basically technically do that, folks. You just take the high to the low where you are. You double that off the high. That's the first part. The second part is kind of neat, too. The second part, even just looking at this chart, is that's basically where a small creek was set up. That's the XAU. HUI, same type of setup on the HUI. HUI right now is 1158, or was up 1158 today. We're at 183.78. And what we have inside here is that today took out the swing points with wide price spread, accelerated volume. Took out the 181, we're at 183. And what we have here on this baby is that what you're going to see now is that the HUI is going to be running up to 224. So there's good numbers. And that, by the way, folks, will be a straight line move. Why a straight line move? Because what happens, folks, once you get over these areas, we get a little you get a little resistance at 193. But bottom line, because we came down so fast, when you break over a consolidation and have built calls, which we've done, you don't go topside just as quick. Let's go to our man Charlie in Framingham. Hey, Charlie, what's going on?
It's freezing up here.
Oh, that's terrible, man. You're getting that Arctic. This is supposed to be really a bad Arctic deal this time, right?
Well, it's 17 degrees right now, and it looks like it's supposed to get down to 11 in the morning. So, hey.
And, folks, anything under basically 27, 28 in Boston is really cold because Boston has wind, but what it also has, it's damp. And that gets right into your bones in a big way.
And that's why Tom O'Brien moved.
That's why I'm in Florida. There's no doubt, man. So, the TZA, Charlie, right?
Yeah, I'm long. It's a short, 3 times short.
It's the direction 3 times shot. The Russell 1000, folks. The low for the year out here is 11. The high is 20. You get action here, Charlie. You know, what you want to see tomorrow? We want to see. Well, if short term. You know, this baby wants to go to your swing point there at 1450. You know, if the trend just keeps going like this, meaning without, you know, going back and forth, you know, you have $17 to $19 this game. That $19.59 is a high volume swing high. So, okay. And what we did, if we go back to the IWM, so just the inverse correlation, the IWM came down today at 67 million shares versus a swing point of 62. You know, so you have an expanded volume as you're coming into the swing. I expect what you're going to see is you're going to blow away that swing point tomorrow. Because, see, what we had last night, folks, in Asia is this. You had the Nikkei down 3%. Taiwan was down 2.8. You had Hang Seng off 0.1. China was down 1.7. It was a bad night in Asia. It's not going to be any better tonight. What that will set up is, of course, follow through in Europe, and this is what you have also. So picture this, folks. If the market had a chance to bounce today, it couldn't handle it. If I'm correct in the assessment that what's going to happen tomorrow, then what you're going to have is that you have 3 days of down. You only have 2 days left in the week. The probability that you're going to get any type of bounce is very small because it's very hard to bounce when you get a trend like that going. And no money manager wants to get in front of that freight train. They want to get away from it. So with 2 days left after we get into tomorrow, I suspect, you know, it's going to be down all the way. And what we also had out here today, and I know you know how this works, Charlie, is that the tick, folks, we had a minus 1085. You don't even get a bounce until you get a minus 1250 to 1300. Then what happened, though, is that when the S&Ps, so the intraday, the S&Ps bounced, folks. When the S&Ps, the E-mini bounced, you know, we hit a low of 1984. The S&Ps bounced up to 2010. When that was happening, people were buying hand over fist, and you got a plus. So check this out. And this is a big clue that they're still buying dips, but they got burnt out here. You got a plus 1,258. That doesn't happen. You get those in down markets, you're going a lot lower. You know, so I'd stay with that TZA. I mean, you know the routine out here, Charlie, okay? They're, you know, day trading vehicles and, you know, bottom line is that daily investment vehicles. So what I do think you have going, though, is that you have the trend at the back right here. And when you get the trend at the back, folks, whether you get a bullish one or bearish one, in this case, the trend at the back is bearish. You can actually get more than 300% out of these. That's how this thing, because it compounds on the way up and gets defensive on the way down. So
it's doing good right now.
It certainly is, man. So 13 degrees. Well, you better stay warm and put those nice scarf on, right? That's what you need.
There you go, buddy. You have a good night.
Hey, Charlie, have a great one, man. Have a safe one. It's getting me cold just thinking about it. You stay right there, folks. A man, Mr. Andy Heck's going to be coming up next, growling a problem with you. And, of course, don't forget, at TFNN, we do 10 hours of live programming every trading day. We start at 8 o'clock in the morning. Our man, Mr. John Logan, kicks us off. Go right till 6 o'clock in the afternoon. All that programming, you get right on your cell phone at tfnn.mobi. Of course, you can get it on your computer. Tiger TV, folks. If you haven't watched Tiger TV, check it out. The charts are amazing. They're clean. They're precise. A lot of clarity inside them. The way you get that, you can do it right in your cell phone, computer, tfnn.com, and then you'll see the Tiger TV on the right-hand side. Just hit it. Dow finished down 130, NASDAQ off 59, S&P's off 21. I do want to thank our man, Mr. Andy Heck, for growling a problem with us and being a trooper, because bottom line is that flu can kick your butt. You stay right there, folks. Our man, Mr. Andy Heck's coming right up. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Everything you need is right in front of you. Have a great one, folks.